could trip up the EV revolution?
What could trip it up is it needs lithium, nickel, cobalt. You can manufacture the cars, but if you can't get the raw material components, you could be in trouble.
This will be battery metals, lithium, nickel, cobalt.
Prices of lithium battery materials are rising fast. Headlines talk of shortages, reliance on China, and the need for localized sources of secure, sustainable supply. Will auto and battery manufacturers vertically integrate to mine and process their battery materials as Ford did in the 1930s? RK Equity focuses exclusively on critical minerals projects in support of EV and battery producers in North America and Europe.
In this series, we will be looking into several development companies who seek to address the risk and opportunity identified by Byron Wien and Chamath Palihapitiya. These videos are based on several independent research notes which you can access on rkequity.com and is for information purposes only and not investment advice. This is Equity Overview with Rodney Hooper.
Welcome to Rockstock Channel and our ongoing equity overview series focused on individual critical raw materials companies that we think should benefit from the rising demand from electric vehicles, energy storage, and other clean energy technologies. In today's episode, Rodney will present an overview of Critical Elements Lithium, a company Rodney and I have been advisors to and have had equity interests in since 2020. We should note that we have not been paid to prepare this video, and all of our comments are our own independent opinions. Rodney and I are not financial advisors nor broker-dealers. This video is for information purposes only and should not be considered investment or financial advice. Please do your own research and read the disclaimer at the end of this video or on RK Equity's website. Before Rodney makes his Critical Elements comments, I'll make a few of my own. It takes 7 to 10 years to bring a lithium project into production. Critical Elements Rose project has been around since Lithium 1.0, the 2009 to 10 period. It is of similar vintage to Lithium America's Thacker Pass, awaiting final permitting, which, followed by full funding, should mean shovels in the ground later this year. In a market starved for spodumene and lithium chemicals, and with shovel-ready projects scarce, we see in TSX Venture-listed Critical Elements the same catch-up potential of other hard rock stories we've covered in this equity overview series, such as Frontier Lithium and Atlantic Lithium. RK Equity believes Quebec for lithium chemicals will likely mirror the province's role in the aluminum market over time. Rio Tinto, the biggest aluminum producer in Quebec, has been in the lithium news of late regarding its Jadar project in Serbia, as well as its purchase of Rincon in Argentina. Rio highlighted last year the world will need 60 Jadar-sized projects to meet global net zero targets by 2050. Translated, the world will need to finance and construct 125 Rose-sized projects. Pure speculation on my part, but I think Rio Tinto, having bought into Argentina and into brine for the first time, could quintuple down and buy Livent. A $4 to $5 billion check would equate to less than 15% of Rio's trailing 12 months, $33 billion in EBITDA. An acquisition of Livent would give Rio not only immense chemical processing expertise from a tier 1 producer and Tesla supplier, but also a partnership with Nemaska in Quebec. We found that ASX-listed lithium stocks generally trade at premiums to TSX peers. We attribute this Canada discount to the fact that Australia, the country, and the stock market have experienced many lithium successes among some failures. Australia's success and patience with lithium has been due to its proximity to the China-dominated lithium story. China remains today the only place where spodumene can be processed, most of it from Australia. Quebec, on the other hand, has had some lithium false starts. The legacy of the North American Lithium and Nemaska cost overruns and bankruptcy proved a headwind to other projects in Canada. But in my view, the challenges those projects faced are not all that unusual in complex mine and chemical project developments, in and outside the lithium industry. I discussed Nemaska in a podcast with my friend Emily Hirsch for those interested. With North America and Europe aggressively playing catch up to China, and with many hydroxide from hard rock projects being pursued in both geographies, the criticality and optionality of Critical Elements should become increasingly apparent. The company has optionality to pursue a lower risk, Australia-like spodumene-only project as a phase one, rather than a more complex integrated strategy from the outset. Critical Elements appointed Cantor Fitzgerald as a corporate advisor last year to assist in strategic dialogues for full project funding. 2021 witnessed aggressive M&A across the lithium industry, especially for advanced projects that can be brought into production before 2025. At the same time, progress has been made on developing lithium chemical conversion capacity in Europe and North America, all of which has increased Critical Elements partnering options. To name several, Europe's battery upstart Northvolt and Portuguese oil refinery Galp formed a joint venture to be located in Portugal, aiming to produce 35,000 hydroxide tons from 2026. They forecast a 700 million euro investment just for the chemical plant. Yet neither party has secured a definitive source of spodumene supply for that facility. AMG Advanced Metallurgical Group articulated a path to grow its modest spodumene production in Brazil to as much as 100,000 tons of lithium chemicals, and that it was in discussions with additional sources for necessary spodumene supply. Rocktech Lithium is planning 24,000 tons of hydroxide, also in Germany by 2024. Luxembourg's La Vista is pursuing a similar strategy, but has yet to articulate site locations or feedstock suppliers. Russia's Halmec, a small tier 1 hydroxide supplier, is partnering with Metsu Outotec to produce 20,000 tons per year from 2023, with plans for another 20,000 tons from 2026. And Germany's Helm and the UK's Leverton Lithium have formed a joint venture to produce 20,000 tons of high-quality lithium chemicals, also in Europe. In North America, integrated and merchant strategies are being pursued or contemplated by Piedmont Lithium, Sayona, Allchem, Nemaska, and Frontier Lithium. And finally, Critical Elements could follow Sigma Lithium's strategy and very profitably sell spodumene into China through counterparties like Japan's Mitsui for a period of time. I expect 2022 will witness a rebirth of investor interest in the Quebec lithium stock narrative. Sayona and Piedmont and Livent and Pallinghurst are due to update the market imminently on plans for North American Lithium and Nemaska, and Allchem too about James Bay. In my view, a North American lithium triangle, a spodumene and hydroxide hub from Carolina to Quebec and Ontario, is poised to emerge. The US and Europe desperately need a more secure, sustainable, and scalable supply chain. Our work with Critical Elements began soon after Tesla's Battery Day and soon after my longtime friend, Eric Zonscherb, joined as chairman. I got to know Eric well during my 7 years working with Western Lithium Americas, and I talked his ear off during a 2018 site visit to Thacker Pass.
Lithium is the irreplaceable element in a lithium-ion battery and will remain in structural deficit for at least the next few years. Auto OEMs need new supplies urgently. RK Equity believes that advanced conventional lithium projects in mature jurisdictions have to some degree been overlooked in 2021 and are likely to come back into favor in 2022, especially projects that could be put into production before 2025. We believe Critical Elements fits in that category. Critical Elements trades on the TSX Venture Exchange, ticker CRE, and on the US OTC market, CRECF. Its market cap is about $218 million, ranking at number 22 on the RK Equity scoreboard as at the end of December 2021. Critical Elements' principal asset is its 100% owned high-purity rose spodumene project. In Quebec, the company plans to develop rose in 2 stages, the first to produce spodumene, the second stage to produce a higher value lithium hydroxide product for North America, Europe, and possibly Asia. A feasibility study for the project was published in November 2017 and returned a post-tax NPV 8% of Canadian dollars 726 million and a post-tax IRR of 35% over a 17-year life of mine. Using prices considerably below current spot pricing, Critical Elements has not committed to any offtake, a favorable position to be in as negotiating power has moved to the miners in an exceptionally tight lithium market. Key management includes President Stefan Harber, formerly the President and Chief Executive Officer of Rockwood Lithium, Albemarle, the world's largest lithium company, bought Rockwood in 2015 for $6.2 billion. CEO Jean-Sébastien Lavallee has nearly 30 years experience in mining exploration. He has forged excellent relationships with the local Cree communities and their governments, an essential element for the project development in Canada. Critical Elements is well funded, having raised 30 million Canadian dollars at $1.75 a share last month. Mineral resource estimate was published in November 2017, totaling 35 million tons. The company's land portfolio is over 700 square kilometers, has high exploration potential, and recent exploration identified 5 new discoveries of spodumene-bearing pegmatites. Unlike most of its peers, Critical Elements reports a recovered grade, taking into account mining dilution, so its reported grade of 0.92% lithium oxide is comparable to 1.04% head grade reported by peers. The Rose project has low iron and mica content, and the process flow sheet will use flotation, translating to recoveries approaching 90% for chemical grade concentrate, some of the highest in the industry. Quebec's low cost and clean hydroelectric power means the project scores highly on an ESG perspective. The project is accessible by road. Electrical transport line owned by Hydro-Quebec runs over the eastern side of the property. Phase 1 operation, just over 186,000 tons of chemical grade spodumene concentrate, 50,000 tons of technical grade spodumene concentrate, and 429 tons of tantalum concentrate. Initial capex, excluding working capital, was $341 million, and OPEX is around $344 a ton. Considering inflation, I would expect the capex and OPEX numbers to increase, but so too have lithium prices. The sensitivity analysis in the 2017 feasibility study, capex plus 20% corresponds to a decrease of only 8% in the after-tax NPV 8%, while a 20% increase in lithium prices corresponds to a 41% increase in after-tax NPV. Critical Elements has appointed Metso Outotec and WSP to prepare a phase 2 engineering study for a chemical plant to produce 27,000 tons of high-quality lithium hydroxide. Critical Elements received its final federal permit last summer and is now awaiting the completion of the provincial permitting process, which is well advanced with an outcome expected shortly. Once final permits are in hand, project financing and a final investment decision for phase 1 of the Rose project should allow for construction to commence in 2022, with the first spodumene concentrate production in 2024, following 15 to 20 months of construction. Critical Elements is trading only at 38% of NPV compared to its peers that trade upwards of 80% or more of NPV. TSX hard rock developers include Sigma in Brazil with nearly $1 billion US market cap, Frontier and Rocktech in Canada with 3 to 430 million market value, and Sayona and Core Lithium on the ASX valued above 750 million US dollars. Importantly, the discounted multiple is on phase 1 only, which is for the production of precursor concentrates. When Critical Element published its phase 2 economics, including a lithium chemical conversion plant, we believe there will be a substantial upside to the integrated project's NPV. In addition, Critical Elements' exploration portfolio is undervalued considering how well valued a number of new explorers are trading on the ASX, such as Green Technologies, Global Lithium, and Winsome Resources, ranging between Aussie $65 million and $225 million in market cap. I expect strong tailwinds in spodumene pricing to be supportive for Critical Elements. Certain lithium hydroxide contracts for 2022 are already trading at $39,000 US dollars a ton, suggesting spodumene concentrate 6% spot prices could rise further and test $4,000 a ton. Critical Element owns 100% of its projects, has not committed any offtake, and as Rose is one of the few projects that can deliver lithium units before 2025, it's a scarce commodity. Upon receiving final provincial permits, I expect the company's strategic partnering and financing process will be robust and result in favorable terms for the company and its equity holders.